Good morning to everyone. This is People's Advocate Sreemannarayana Mallela talking about the Finance Act 2026. The Income Tax Act, there are tax rates, business income, capital gain, other sources registered of NPO, exemptions and deductions, TDS, TCS, and written off income, assessment, penalty prosecution, miscellaneous, foreign assets, foreign assets of small taxpayers disclosure scheme 2026 and a scheme of introduces small taxpayers and disclose legal foreign assets and paying specific tax rate fee. GST proposal amendment in the 15th of section 34 of the CGST Act within the respect of this part of the sale discount. Proposal to extent of the benefit of the provisions refunds to the inverted duty tax structure refunds proposed to remove the minimum thresholding limit to 1000 rupees GST refunds on exports with the payment of tax. Proposal to insert section 10, section 101 cap A and 1A to empower the exclusive authority as a national appellate authority appeals against the advance ruling. Proposal to omit the special procedure provisions under the section 13 subsection 8 class B of the IGST Act with reference to one by one will come now. My dear friends, good morning to everyone. This is People's Advocate Sreemannarayana Mallela who's speaking about on taxation. కోట్ లేకుండా కుదరదు కదా. Sorry, my friend. This is People's Advocate Sreemannarayana Mallela is now talking about the taxation. The Finance Act 2026 is speaking by Mr. Advocate Sreemannarayana Mallela now. Within 1 hour, we are going to complete comprehensively about taxation and amendments of the Finance Act 2026 for the only for the purpose of stakeholders. We are doing this not for any education purpose. Also, we are doing for the stakeholders of the public, general public. I am doing this video for the general public at large, whoever need the financier 2026 2027 they're going to impact this budget. So just understand and the basically we'll talk about these projects. So friends, let's go to let's move, let's discuss. Dear friends, the people's advocate Sreemannarayana Mallela today going out on the budget. My dear friend, the moment you see the budget, the 2026, what amendments were there, just I want to brief you. The no change have been proposed to tax rates under the old or new tax regime or to the rates surcharge and education cess. The tax rate slabs under the new tax regime, section 202 of the Income Tax Act 2025, corresponding section 115 BAC of 1961, shall be as follows: up to 4 lakh nil, 4 lakhs to 8 lakhs 5 percentage, and 8 lakhs to 12 lakhs 10 percentage, 12 lakhs to 16 lakh 15 percentage, 16 lakhs to 20 lakh 20 percentage, 20 lakhs to 24 lakh 25 percentage, above 24 lakh 30 percentage. See, the reduction tax rates unexplained income applicable from the assessment year 2026-27, section 195 of the Income Tax Act 2025 corresponding section 115 BBE of the Income Tax Act 1961 provides taxation of income referred to section 102, 106 of the Income Tax Act 2025 corresponding section of the 68, 68 to 69D of the Income Tax Act 1961. My dear friends, the earlier with reference to unexplained income, unexplained jewelry, unexplained cash credit will be clubbed into the 68 to 69, including referred by 115 BBE. Now, this is going to affect section 195 of the Income Tax Act 2025. Understand? Income Tax Act 2020, section 195 of the Income Tax Act 2025 speaks about 115 BBE, 68, 69, 69B, and the entire 69D of the 1961. So these are now clubbed into the new Income Tax Act 195. So the old Income Tax Act, the people who are pursuing the Income Tax Act 1961, if you refer 68, 69D, 69B, 69C, 69D, 69E, 69G of the Income Tax Act 1961 and Section 115, we are now clubbed into the Section 195 of the Income Tax Act 2025. Oh. So you need to understand that hereafter any unexplained income is going to be taxed under section 195 of the Income Tax Act 2025. Oh, remember, my dear friends. Now, there are such tax that 60% it is a proposed to reduce the tax rates under section 195 from 60 to 30 percentage. The amendment reduced the effective tax rate after 25 percentage surcharge force percentage cess on undisclosed income from 78 percentage to 39 percentage. Further, section 443 of the Income Tax Act 2025, corresponding section 271 AAC of the Income Tax Act 1961, currently provide for a separate penalty equal to 10% of the tax payable under section 195 subsection 1 clause 1, where the income tax is determined for any tax year include income referred to section 102 106. What is section 102 106 of the Income Tax Act 2025? These are speaking about 68A, 68B, 69C, 69D, and which are clubbed with the 115 BBE. Now it is coming under the Income Tax Act 2025, section 195. Oh. Okay, friends. Okay, friends. Mallela Durga Bhavani. Good evening, ma'am. Thank you very much. Yes, ma'am. Mallela Durga Bhavani. Yes, ma'am. What do you say, ma'am? I'm talking about Income Tax Act 2025, ma'am. This video is good video for the people who are they want to show. So our target is to reach the general public regarding to this video. Once I complete this class, I'm also going to put WhatsApp status and during I'm going to plan to share to the people. So it may be useful to the financial year 2026 to 27, the people who want to do it. So now hereafter, no Income Tax Act 1961, my dear friends. Well, let's move to the Income Tax Act 2025. I'm also enjoy. We got entire income tax and is still eradicated. Go in the people who are experts, though so much now they want to realign their numbers. How the Companies Act 1956 realigned at the time of the Companies Act 2013 came. Everybody they learn to the numbers. Don't worry, but numbers only game. Entire subject matter same is there. Only few changes. You can capture those, no matter. Only thing is remember the numbers only the matter and game. Don't worry, you will be able to be recapture, my friend. Now the further now section 443 of the Income Tax Act 2025 speaks about where the Income Tax Act 1960 speaks about section 271 AAC, and currently provide a special tax rate penalty equal to 10% of tax payable under section 195 subsection 1 class 1, where the income determined for any tax year includes income referred to in section 102 106 proposed to omit the portion and align penalty applicable to such income with the framework for underreporting income consequences of the misreporting under section 439 subsection 11 of the Income Tax Act 2025, corresponding to section 270 capital G of the Income Tax Act 1961. My dear friend, the moment you do underreporting, misreporting, underreporting will be dealt by section 270A, whereas misreporting 271 AAC, So, underreporting, misreporting now dealt by section 439, subsection 11 of the Income Tax Act 2025. Understand next. The rationalization of the minimum alternate tax MAT provisions. Now, section 206 of the Income Tax Act 2025, corresponding section 115 JB of the Income Tax Act 1961, provides for the levy of the minimum alternative tax MAT on companies under which tax is levied on the book profit at 15%. When the tax payable under the normal provision is lower than the MAT, the company must pay tax in accordance with the MAT provisions. The excess MAT paid over, and normal tax can be carried forward as a MAT credit, which is valid up to 15 years, can be used after future taxes when normal tax exceeds the MAT. Currently, the MAT framework operates only under the old tax regime. The Finance Bill 2026 proposes major change to the MAT mechanism. It suggests the following: MAT paid under the old tax regime will be treated as a final tax with no new MAT credit is allowed. Accordingly, accordingly, bah, this is very, very, very important. Right now, I'll try to put WhatsApp status this section because it is going to impact of the many business people who have their more tax MAT credit will be there. My dear friend, it's drastic impact in the MNC companies who have major tax credit. So you need to be very careful. Hereafter, utilization of MAT is possible now. I don't think so. It will be useful immediately utilization of that credit. The Finance Bill 2026 proposed a major change to the MAT mechanism. It suggests the following: MAT paid under the old tax regime will be treated as a final tax under the new MAT credit, allowed according to section 206 class M of the Income Tax Act 2025, corresponding 115 JJA or 2A of the Income Tax Act 1961, are proposed to be omitted. So very, very important. Now itself I put the status. Anybody or bosses will see. Very, 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 very important. Okay, we'll see. Now, it is very important amendment. And to compensate the MAT rate is proposed to be reduced to 15 to 14 percentage of the book profit. What maximum benefit they given? Nothing, just 1 percentage. It is rumba mosam. Okay, what to do? We need to follow. No issue. Next. The use of existing MAT credit proposed only under the new tax regime for domestic companies in section 200 and 201 of the Income Tax Act 2025, section 115 BAA and 115 BA of the BAB of the Income Tax Act 1961. Further, such set off will be limited to 25% of the tax liability. To give each of this proposal a new section 206A 206 subsection 3 is proposed to be inserted. For foreign companies, set off will be permitted only to the extent of the normal tax exceeds MAT in the relevant year. To give effect of the proposal, a new section 206 subsection 4 is proposed to be inserted. The remaining credit will be carried forward to the next year. This carry forward to the set of the tax credit will not be allowed to the beyond of the 15 tax years following the year in which tax credit first become allowable under section 115 JAA of the Income Tax Act 1961. Furthermore, to operationalize the revised MAT credit framework, the following consequential changes are also proposed under section of the Income Tax Act 2025. Whereas, whereas a result of the furnishing an updated return, the MAT credit available under section 206C subsection 3 and section 206 subsection 4 is reduced for any subsequent year. The taxpayer shall be required to file updated return for each such subsequent year. This is provided by a provision to amend section 263 of subsection 6 class E of the Income Tax Act 2025, corresponding to section 139(8)A of the Income Tax Act 1961. Hereafter, your section 139(8) speaks about the Income Tax Act 2025, section 263, subsection 6, class E. So, my dear friends who learned a lot, direct tax experts, now you need to realign your memory numbers, because your expertise, you will tell this number, that number, this number, that number. Now you need to realign all the numbers. See, 263 in World Income Tax Act 1961 speaks about revision proceedings. Now it is speaking about updated return. So how there are so many changes. So entire act itself changed. So that you need to be realign your brain numbers so that you will be happy. Otherwise, you will cry. Everybody will cry. Now, the MAT credit allowable under section 206, subsection 3, section 206, subsection 4 shall be reduced while computing self-assessment tax, interest for late filing return or default furnishing return, interest for default or deferment of the payment of advance tax, and tax and interest payable filing the updated return. These changes are proposed through consequential amendment section 266 and 423, 424, 425 and 267 of the Income Tax Act 2025, corresponding to section 140 Cat A, 234A, 234B, 234C and 140B of the Income Tax Act 1961. These amendments aim to facilitate a transition progen the old tax regime to the new by gradually phasing out the MAT credit system. Treating a MAT as a final tax under the old regime simplifies compliance, reduce the accumulation of the long-term credit simultaneously. So a limited set-off under the new regime offer the transitional relief to the companies carrying forward MAT credit. The MAT provision do not apply to all presumptive schemes available to non-residents applicable from assessment year 26-27. So, Section 206 of the Income Tax Act 2025, corresponding Section 115 JB of the Income Tax Act 1961, provides that the provision relating to minimum alternate tax do not apply to certain foreign companies. Additionally, income of the non-resident from the specific business opting for presumptive taxation under Section 61 of the Income Tax Act 2025. My dear friend, in Income Tax Act 1961 speaks about 44B, 44BB, 44BBA, 44BBB. Now, coming to the Section 61 of the Income Tax Act 2025. Remember, and the Income Tax Act, see, now it is excluded from the MAT framework. However, not all business under the presumptive taxation regime currently qualify for such exclusion. To ensure the uniform treatment across all specified business of a non-resident taxed on the presumptive basis, it is a proposal to extent of the MAT exemption to the additional categories, but are also covered under the section 61 of the Income Tax Act 2025, corresponding section 44 BBC, BBD. What BBC, BBD? 44 BBC, BBD, these and all for the non-residents, non-resident taxation. Okay, for them, which are as follows. A presumptive scheme for the operation of the cruise ship is new section 144 BBC BBD they brought into the Finance Act 2024. Now they brought into the Income Tax Act 2025 under section 61. A presumptive scheme for the operation of the cruise ship, a presumptive scheme for providing services of technology to set up electronic manufacturing facilities in India, increasing security transaction tax under the existing framework of the Income Tax Act 2025, read with security transaction tax regime introduced by the Finance Act 2004, STT levied on the transaction specified securities carried out through the recognized stock exchange, the Finance Bill 2026 proposed to revise the security transaction tax rates applicable to certain derivatives transactions, namely opting futures and securities. So, the existing rates, option premium, earlier 1, now 1.5, 0.15, change 50. And sale of options where options exercised, intrinsic price, sale of options 0.15, sale of options where options exercised 0.15, sale of futures 0.5. So you just remember the new rates, no need to remember the old rates. The revised rates, and the revised rates, the revised rates shall apply to a transaction entered into on or after 1st April 2026. The increase in SGT on derivative transaction is a part of the coordinated fiscal crackdown. So that reinforce SEBI measures against excessive retail speculation in the F&O market. This is a dual approach of higher transaction cost combined with the SEBI actions. Increased contract size, stricter position limits, enhanced margin, and weekly expiry transactions aims to curb the disproportionate increase in a speculation by making high frequency trading economically. Now, if you take the business income, the deduction or contribution to the employee welfare fund to be allowed if paid by the due date of the filing the return of income. Earlier, what happened? No, this is they strictly follow employee laws, prudent fund laws. So, for example, you paid at May 2026. Then that will not be allowed as a deduction for the financial year 2025-26. But whereas now they brought the amendment, which is from the Income Tax Act 1960, sorry, Income Tax Act 2025, Section 29, subsection 1, Class A. Now it is even if you paid on or before the due date is allowing. But actually, what happened? According to Section 43B, the payments will be allowed based on the actual payments. But whereas Section 36, subsection 1, Class 6A, it speaks about with respect to Provident Fund alone, employee welfare laws, which is like ESI, PF, this and all will be allowed deduction based on that law rather than this law. Even if you remember, Gujarat State Transport Road Corporation case is likewise, and there are many other law cases, even Supreme Court and that. But now they brought this amendment. It is good for us, even if you miss it out in the financial year 25-26. Still, you have a time limit. If you pay by before the due date of the filing of return, it will be allowed as a deduction for the previous year. Okay. That's the thing only. I'm not going to read much on that, because that's a thing is there. Now, if you come to the expenditure disallowed on account of non-deduction or non-deposit of TDS, can be claimed by a non-life insurance companies when TDS is subsequently paid. This also, see, this also what happened. Expenditure disallowed on account of non-deduction, non-deposit TDS can be claimed by a non-life insurance companies when TDS is subsequently paid. Yeah, it is a similar amendment. Nothing is more. See, actually, if you are disallowed, the expenditure disallowed because of non-compliance of TDS. As and when the TDS compliance I fulfilled, that year I can claim as a deduction. Now, this facility they brought to the insurance companies also in Income Tax Act 2025, which section speaks about the under the existing provision part B of the Schedule B of the Income Tax Act 2025, corresponding rule to the 5 of the first schedule to the Income Tax Act 1961. Now, so they brought this amendment. There is nothing to speak about this, and that only amendment. That's it. Now, extension of the deduction expenditure on prospecting the exploration of the critical minerals. See, this now it is earlier in Income Tax Act. It's talk about around 35 ADA and 35 BBA, like that one section is there. Now, in Income Tax Act 2025, this section brought to the section 51 of the Income Tax Act 2025. Section 51 of the Income Tax Act 2025, corresponding Section 35E of the Income Tax Act 1961, permit the deduction on the specified expenditure incurred by Indian companies and resident taxpayers, other than companies engaged in the activities related to the prospecting, extraction, or production of the mineral oil, Part A and Part B, Schedule 12 of the Income Tax Act 2025. Oh. Correspondingly, Schedule 7 of the Income Tax Act 1961, such expenditure is allowed as a deduction at deferred basis over the 10 years, starting from the year of the commencement of the production. For cost incurred wholly and exclusively for the prospecting of the developing of the mine or other natural deposit during the year and up to 4 years prior to it, to promote exploration and prospection of the critical mineral. It is a proposed to expand the list of the mineral schedule 7 to the, so that the benefit of the deduction under the section 51 applies to expenses related to the critical minerals according to the schedule 7 of the Income Tax Act 2025 is a proposed to be amended. Okay, now the extension of the tonnage tax scheme to inland vessels. Whereas chapter 8, chapter 13 of the Income Tax Act 2025, corresponding chapter 13 of the G of the Income Tax Act 1961, contained a special provision for taxing the income of the shipping companies under the tonnage tax scheme, which offers simplified presumptive method taxation is instead of the normal income of the computation. Initially, this scheme applied only to ocean going ships and vessels. However, the Finance Act 2025 extended the scheme to the inland vessels registered under the Inland Vessels Act 2021 to promote inland water transport to the provide tax partly and maritime shipping sector. See, after the existing extending the tonnage tax scheme to the inland vessel, it was observed that certain modifications are necessary in the provisions of the said chapter aligned with the Inland Vessels Act 2021 and the rules made thereunder implement the Income Tax Act scheme extended to the inland vessel. It is a proposal to making the following amendments. What are those? Earlier, if you see in Income Tax Act 1961, Section 115 VJ is speaking about that tonnage tax scheme. Now, in Income Tax Act 2025, Section 227 only speaking about the tonnage taxation and determination of the tonnage income. Earlier, there are like up to 1,050 rupees, 1 to 5,075 rupees, 1,000, like this there. Now, same thing they brought into the section 227 of the Income Tax Act 2025. Section 227 subsection 9 class B class 3 of the Income Tax Act 2025 corresponding to section 115V of the Act of the Income Tax Act 1961 is proposed to be amended to replace the word certificate with the certificate registration issued under the Inland Vessels Act 2021. And section 228 subsection 3 class B 2 of the Income Tax Act 2025 corresponding to section 115V subsection 1 of the Income Tax Act 1961 is a proposed to be amended to include onboard onshore activity inland vessel within the core activity of the tonnage company. Now, Section 232, subsection 12 of the Income Tax Act 2025, corresponding to Section 115V, U of the subsection 1 of the Income Tax Act 1961, is proposed to be amended include to the adherence to the training guidelines for inland vessels issued by the Inland Waterway Authority and notified by the central government. Now, Section 232, subsection 13 of the Income Tax Act 2025, corresponding to Section 115 VU and Class 2 VU, subsection 2, sorry, sorry guys. See, Section 232, subsection 13 of the Income Tax Act 1960, sorry, Section 232, Section 232, subsection 13 of the Income Tax Act 2025, corresponding to Section 115 VU of the subsection 2 of the Income Tax Act 1961, is proposed to be amended to require the submission of the training compliance certificate from the appropriate designated authority, including the authority for inland vessels. Section 232, subsection 17 of the Income Tax Act 2025, corresponding to Section 115 U of 115V, double V, subsection 3 of the Income Tax Act 1961, is proposed to be amended to include consultation with the Inland Waterway Authority for calculating the average tonnage of the inland vessels. Section 235 of the Income Tax Act 2025, corresponding to Section 115V of the Income Tax Act 1961, proposed to be amended to include the definition of the Inland Waterways Authority of India for Chapter 13G. Rationalization definition of the eligible SSC under Section 58, subsection 11. See, the Section 58, subsection 11, Class A of the Income Tax Act 2025, corresponding explanation section 44 AD of the Income Tax Act 1961, the defined term eligible SSC is a resident individual, HUF, excluding LLP, that has not claimed any deduction under section 144 of the Income Tax Act 2025, corresponding section 10AA of the Income Tax Act 1961, and also not claimed any deduction chapter 7 of the Income Tax Act 2025, corresponding chapter 6AC of the Income Tax Act 1961, further relevant here. This definition is to ensure the taxpayer who do not claim a specific profit related or incentives of the deduction to the consider eligible SSCs. Under the Income Tax Act 2025, section 144 has been incorporated into the chapter 8C. Consequently, a separate reference to 144 definition eligible SSC created a duplication and serve no separate purpose. To prevent this overlap and simplify the provision, Finance Act Bill 2026 propose removing the reference to 144 and section 158 to A. This is not much significance in our life today. Now, buyback taxation shifted to capital gain regime again. See, previously what happened, the buyback taxation, according to Finance Act 2024, the buyback taxation, they kept under the like income from other sources, and the loss to the shareholder will be chargeable under the PGBP. Now these guys again brought to the page number 10, right? Page number 10, yes. Capital gain again brought to the again to the PGB capital gain. Previously, they kept under the charging section. I mean, income from other sources. They put under the income from other sources, and that will be taxable in the hands of SSE. And whatever the share consideration received minus the share price, that will be the loss will be charged to set off carry forward in the business. Loss will be set off. Okay, no capital gain, only IFIs. Now again they reback to the capital gain. That's it. You want to talk more? We'll talk more. Under the existing framework of the Income Tax Act 2025, consideration received by a shareholder on buyback shares or other specified security by a company is treated as a dividend income under Section 2, subsection 40 of the Income Tax Act 2025, corresponding Section 2, subsection 22, Clause F of the Income Tax Act 1961 Act. At the same time, Section 69 of the Income Tax Act 2025, corresponding to Section 46A and 1961 Act recognize the cost of acquisition such extinguished shares separately as a capital loss. This created artificial bifurcation where the receipt was taxed as a dividend while corresponding cost reduction is a capital loss. This position is similar in the regime of the first introduced in the Income Tax Act 1961 with effect from 10-10-2001, by virtue of Section 2, subsection 22, Clause F, read which Section 46 of the buyback consideration was treated as a deemed dividend, and the capital gain computation mechanism effectively resulted is a nil consideration, thereby generating as a capital loss. The Finance Bill 2026 proposed to rationalize this anomaly by providing that consideration received on buyback shall no longer be treated as a dividend but shall be chargeable to tax under the head capital gain. The Finance Bill 2026 proposed to rationalize this anomaly, providing consideration received by buyback shall no longer be treated as a dividend but shall be chargeable to tax under the capital gain. This achieved by omitting Section 2, subsection 40 and Clause F and substituting and subsection 2 and 3 of the Section 69 of the Income Tax Act 2025. Further, recognizing this distinct position of promoters, buyback decision, the law introduced additional tax such case. As a result of the promoter will face effective tax rate 30% and promoter compliance an effective tax rate 22% on a gain arising from the buyback. Consequential amendment has been brought into the Section 7 of the Income Tax Act 2025, corresponding to the Section 7 of the Income Tax Act 1961. Now, see, you understood at this point very easy. The Finance Bill 2026 proposed to rationalize this anomaly by providing that consideration received buyback shall no longer be treated as a dividend but shall be chargeable to tax under the head capital gain. This achieved by the omitting Section 240 of the substituting the subsection 2 and 3 of the Section 69 of the Income Tax Act 1960, Income Tax Act 2025. Further recognition distinct position to promoter in buyback decision, the law introduced an additional tax in such case. As a result of the promoter will face an effective tax rate 30% and promoter companies an effective tax rate 22% on gains arising from the buyback. Consequential amendment has also been proposed to be Section 7 of the Income Tax Act 2025, corresponding to Section 7 of the Income Tax Act 1961. Okay. Exemption of the sovereign gold and bonds allowed only to original holder if held till the maturity. I should not speak much more on this. Leave it. Incoming voice call from Manitoba. గురు చెప్పు గురు. ఆయన ఎక్స్పర్ట్ ఎట్టి పరిస్థితుల్లో నీకు ట్రేడ్ మార్క్ సర్టిఫికేట్ తీసుకొచ్చి నీ చేతుల్లో పెడతాడు. అందుకని ఆయన నంబర్ ఇచ్చా. ఈజ్ ఏ హ్యాండ్లింగ్ ఏంది ఎక్స్క్లూజివ్ అదే బిజినెస్ ఆయన రెండో బిజినెస్ లేదు. అడ్వకేటే పర్ఫెక్ట్. నీకెందుకు అబ్బా! నువ్వు అసలు నువ్వు ఎంత చేయమంటే అంత చేత్తనాయన. నీకు ఆ మాటకి ఇబ్బంది లేదు. మనం ఎంత చేస్తే అంత. నీకు ఇప్పుడు మన గుంటూరోడు అడిగేదానికంటే ఇంకా పాలు తక్కువే. ఆ? ఏంటిది? మొత్తం ఎవ్రీథింగ్ ఐ నో. వాట్ ఐ డోంట్ నో. ఆ? ఉమ్. దానికా ఫస్ట్ ఒక అఫిడవిట్. ఈ అఫిడవిట్ లో నువ్వు డిస్క్లోజ్ చేస్తావు ఇన్ఫర్మేషన్, అది ఎలా వచ్చింది, ఎలా వాడుతావు, ఎన్నాళ్ళ నుంచి వాడుతున్నావు, నీ బిజినెస్ ఏంది, మొత్తం ఇన్ఫర్మేషన్ అంతా నువ్వు అఫిడవిట్ ఇస్తావు. ఓకే, ఆ అఫిడవిట్ ₹100 స్టాంప్ పేపర్ మీద తీసుకొని వచ్చి మనకి ఇస్తావు. ఇటు సైడ్ నుంచి నీ తరపున ఎవరైతే ఫైల్ చేస్తున్నారో ఆ పర్సన్ పవర్ ఆఫ్ అటార్నీ తీసుకుంటాడు నీ తరపున. తీసుకొని నువ్వు ఇచ్చిన అన్ని మెన్షన్ చేసేసి ఫైల్ చేస్తాడు. ఫైల్ చేసిన తర్వాత ఏదైనా క్వరీ వస్తే రిప్లై ఇవ్వాలి. అలా కూడా చేసుకోవచ్చు. యు ఆర్ ప్రపోజ్ టు టేక్ దట్ నేమ్, దట్ ఆల్సో ఫైన్. వాడు అడుగుతాడు అక్కడ, ఇది ఆల్రెడీ ఎగ్జిస్టింగ్ బిజినెస్ ఎప్పటి నుంచి వాడుతున్నావు. నీకు ఆల్రెడీ దాని మీద ఎవరైనా పెట్టుంటే నీకు రాదు. నీకు అక్కడ ఉంటది పబ్లిక్ సెర్చ్లో ఎస్ అని కొడితే ఎస్ అని పెట్టుంటది. వాడు నీకు అప్లై చేసిన తర్వాత ఓవరాల్ సిగ్నిఫికెంట్ టైం 8 months పడుతుంది. క్వరీ వచ్చిద్ది, ఆర్గ్యుమెంట్స్ జరుగుతాయి. ఒకవేళ ఏదైనా ఆల్రెడీ సిమిలర్ నెంబర్ ఉంటే కరస్పాండింగ్ అబ్జెక్షన్ రైజ్ చేస్తాడు. ఆర్గ్యుమెంట్ ఇవన్నీ అయిపోయిన తర్వాత నీకు వచ్చేది. సో ఆల్మోస్ట్ 1 year. అది ఫీజా నేమ్కి వచ్చేసి 4 వాడని ఛార్జీలు పక్కన పెడితే మనం 4,500 కట్టాలి. నేమ్కి 4,500, లోగోకి 4,500. అంటే అచ్చం నీకు నేమ్ కావాలంటే నేమ్కి 4,500, లోగో కావాలంటే లోగోకి 4,500. 2 సపరేట్ అప్లికేషన్స్, నాట్ సింగిల్ అప్లికేషన్. దాంట్లో అన్ని వివరాలు ఉంటాయి. నువ్వేమి గుడ్ సప్లై చేస్తున్నావు, ఏమేమి సర్వీస్, మొత్తం అన్ని వివరాలు కరెక్ట్గా ఉంటాయి. ఇబ్బంది లేదు. బట్ ఇట్ ఈజీ ఓన్లీ, ఇట్ ఈస్ నాట్ ఏ కాంప్లెక్సిటీ. ఈవెన్ ఇఫ్ యూ కెన్ లాగిన్ ఆల్సో యూ కెన్ డూ. అక్కడ నీకు దాని మీద ఆల్రెడీ డిసైడ్ కేసులు వస్తున్నాయిగా. ఇప్పుడు ప్రొనౌన్సియేషను, డెఫెక్టివ్ ట్రేడ్ ప్రాక్టీసెస్, సిమిలర్ నేమ్స్ వస్తుంటే అవి దే విల్ నాట్ అలౌగా. ఇప్పుడు కంపెనీస్ యాక్ట్ 2013లో కూడా ఏముంటది, సేమ్ నేమ్ తోటి ప్రొనౌన్స్ అయ్యేటప్పుడు జనాలు కన్ఫ్యూజ్ చేస్తుంటే దే విల్ నాట్ అలౌ దట్ నేమ్. అట్లాగే ఇక్కడ నువ్వు చేసిన తర్వాత దే విల్ కాల్ యూ ఫర్ లిసనింగ్ యువర్ వాయిస్ అండ్ దే విల్ ఆస్క్ యువర్ క్వరీస్. సో నేను అనేది ఏంటంటే, వీడు గుంటూరు వాడు చాట్ అకౌంట్ వాడికి సగం తెలిసి సగం తెలియపోయినా, ఇతనేంది ఈస్ నంబర్ ఆఫ్ ఇయర్స్ ఇంటూ సేమ్ దట్ బిజినెస్ ఓన్లీ, దెర్ ఇస్ నో ఎనీ అదర్ బిజినెస్. మనోడు ఎక్స్పర్ట్. ఇంకా వాడి చాట్ చేయించుకుంటే బెస్ట్ కదా. నీకు ఇబ్బంది లేదు, నువ్వు అడుగు ఆయన్ని. నీకు ఎక్కువ చేస్తే నాకు ఫోన్ చేసి చెప్పు, నేను చెబుతాను. ఆయన అడ్వకేట్ అండి, మీరు అలా తీసుకుంటే కుదరదు, మీరు రూపాయి ఇచ్చి కూడా మేము ₹10 ఇస్తామని చెబుతాను. ఓకేనా? ఎందుకంటే ఆయనకి రేపు ఏదైనా క్వరీ వస్తే చెన్నైలో అటెండ్ అవ్వాల్సింది మనమే. ఎందుకు, ఆయన హైదరాబాద్ లో కూర్చొని చేస్తున్నాడు బిజినెస్ అందరికి. అతను ఉండేది హైదరాబాదు, బట్ ఈ డూయింగ్ వెరీ వెల్ బిజినెస్ ఆన్ దట్. ఆయనకి ఎక్కువ, దాదాపు ఆయన కింద 10 మంది చేసేవాళ్ళు స్టాఫ్. వాడి దగ్గర బల్క్ లో వాడు చేస్తున్నాడు కాబట్టి వాడికి ఏదైనా ఇష్యూ వస్తే చెన్నైలో అటెండ్ అయ్యేది మనమే కేసు. అది కాబట్టి మనకు తక్కువలో చేస్తున్నాడు. నీకు అర్థమైందా? వేరే వాళ్ళ కంటే కూడా మనకు తక్కువలో ఏం చేస్తుంటే, రేపు ఇష్యూ వస్తే చెన్నైలో కోర్టులో అటెండ్ అవ్వాలి కదా మనం. ఆయన ఆన్లైన్ అటెండ్ అవుతున్నాడు అంటలేదు, వేరే విషయం. మనం అటెండ్ అవ్వండి గంటలో పోయేస్తాం కదా మన కోర్టుకి. అందుకని నీకు తక్కువ నువ్వు డబ్బు గురించి వరి అవ్వబాక. నువ్వు బయట కనుక్కో, బయట ₹100 అంటే ఇక్కడ ₹5. ఓకేనా? నీకు గురూజీ ఆ వివరాలన్నీ నీకు ఏం కావాలో మొత్తం ఆయన చదువుతాడు. నీకు కాల్ చేయలేదు ఇంకా నీకు ఆయన? నువ్వు కదా, ఆయన చేయలేదు నీకు? అదేం చేయపడం ఏంది, ఇచ్చాను చేయమని, చేస్తానన్నడే. లోగో వేస్ట్ ఎందుకైతే నీకు, ఆ లోగో మళ్ళీ నీకు వేరే వాళ్ళకి ఇవ్వడు. ఆ, ఆ, అట్టంటావా? అదేలే అదేలే. అయితే నువ్వు నేమ్కి అప్లై చేయి, నేమ్ అప్లికేషన్ పెట్టావు. పెట్టేసే. అయినా నాకు గురు, నీకు నేను చెప్పేది విను. నీకు అసలు కాన్ఫరెన్స్ కాల్ పెట్టుకుంటావా? నువ్వు మాట్లాడచ్చు గురుజీ. సరే ఉండైతే. నేనా, నేను చిన్న ఆన్లైన్ లెక్చర్ ఇస్తున్నా. నీకెందుకు గురు, మనం నేను చెప్పింది గురు, నీకు ఇబ్బంది లేదు. ఒక్కసారి మెసేజ్ హాయ్ అని పెట్టానికి పెట్టావా? అసలు హాయ్ అని, హాయ్ అన్న పెట్టావా? సరే సరే గురూజీ, ఒక్కసారి ఆయనకి వాట్సాప్ హాయ్ అని పెట్టు. నీకు తన్నుకుండా మెసేజ్లు వస్తాయి ఆయన నుంచి, నీకు వరుసగా టక వచ్చేస్తాయి. ఆ, సరే సరే. ఓకే గురూజీ. ఓకే గురూజీ. ఓకే గురూజీ. ఉమ్, ఉమ్. ఓకే. ఓకే గురూజీ. ఓకే గురూజీ. నువ్వు డబ్బులు కూడా ముందు నువ్వేం కట్టనక్కర్లా. ముందు ఆయన సర్వీస్ చేయని, ముందు అప్లికేషన్ పెట్టని, తర్వాత ఇద్దాం, ఏమైంది? నువ్వు ఆ డబ్బులు కూడా, నువ్వు ఆన్లైన్లో కట్టే డబ్బులు కూడా నువ్వు నువ్వు లాగిన్ అయ్యి నువ్వైనా కట్టొచ్చు, లేదా ఆయన కట్టినా పర్లేదు. 4,500 అది నాకు తెలుసుగా ఫీజు. నీకు ఆల్రెడీ పంపించాగా. ఆ, అంతే, ఇంకంతే, అంతే అంతే. ఓకే గురూజీ, నీకు ఆ ఇబ్బంది ఏం లేదు. ఓకేనా, టేక్ కేర్, టేక్ కేర్. ఇంకేం విశేషాలు? హైకోర్టు ఏం లేవా? పెట్టేశారా? ఆ, అబ్బా, సూపర్ సూపర్ గురూజీ. కొంచెం నా పేరు యాడ్ చేయి ఒకళ్ళతో వెనకాల, కింద. సంతకం ఏమో నువ్వు పెట్టేయచ్చు, ఏమన్నాడా? ఆ, పంపిస్తా పో. సరే గురూజీ. ఓకే ఓకే గురూజీ. ఓకే గురూజీ. ఓకే గురూజీ, నీకు ట్రేడ్ మార్క్లు ఇబ్బంది లేదు. ఆయన ఎక్స్పర్ట్ రుస్తుము, వాడు తెప్పిస్తాడు నీకు. మన పర్ఫెక్ట్గా ఉంటుంది. వాడికి మన బ్యాక్గ్రౌండ్ ఇంకేం చెప్పనక్కర్లా. మనం వాడికి అనవసరం, మనం ఏం చేస్తున్నాం, ఏ బిజినెస్ అయిన వాడికి అనవసరం. మనం పట్టుకు జెన్యున్గా వెళ్తున్నాం అని చెప్పడం అంతే. అది అది మన అంతే. ఉమ్. రేపు ఉదయం కాదు, మనం ఇప్పుడు పెడుతున్నాం అని చెప్పం, ఏమన్నా. ఉమ్. అంతే. ఆ, అంతే. అది నీకెందుకు గురూజీ, నువ్వు పర్ఫెక్ట్గా ఉండు, నీకు హ్యాపీగా వచ్చింది. ఓకేనా? ఆ, ఓకే గురూజీ, టేక్ కేర్, టేక్ కేర్, బాయ్. అయ్యో, టైం 9:43, ఓన్లీ 20 minutes. 20 minutes లో మెనీ పేపర్స్ కెన్ ఐ కంప్లీట్? మేబీ డౌట్ ఓన్లీ. ఓకే. Purchase at the time of original issue and held continuously till the maturity, exempt. Not purchased at the time of original issue but held till maturity, taxable. Exemptions to sovereign gold bonds to be allowed only to the original holder if he held till the maturity. The important point ఇది కూడా రైటా? Purchased at the time of original issue, held continuous till the maturity, exempt. Not purchased at the time of the original held issue, but held till the maturity, taxable. Purchased at the time of the original issue, but not till the held the maturity, taxable. Neither purchased at the time of original issue, nor held till the maturity. So basic గా పర్చేజ్డ్ హెల్డ్ టిల్ ద మెచ్యూరిటీ వాళ్ళకి మాత్రమే ఎగ్జంప్షన్. అది దీంట్లో పెద్ద చూడాల్సిందే లేదు. నెక్స్ట్ అదర్ సోర్సెస్. No deduction for interest against dividend and mutual fund income. Super bah, important ఇది. No deduction for interest and against dividend and mutual fund income. It's also important amendment అబ్బా. పేజ్ నెంబర్ 12లో ఉంది. పేజ్ నెంబర్ 12లో ఉంది. No deduction for interest against dividend and mutual fund income. Section 93 of the Income Tax Act 2025, corresponding to Section 57 of the Income Tax Act 1961, provides for deduction from income chargeable under the head income from other sources. Section 93, subsection 2 of the Income Tax Act 2025, corresponding to the first projo to Section 57 of the Income Tax Act 1961, allows a shareholder to claim a deduction for the interest expenditure from dividend income, subject to a limit of 20% of total dividend income. No further deduction is allowed for any other expenses, including the commission or remuneration paid to a banker or any other person for the purpose of realizing such dividend. Section 93, subsection 2 is a proposed to be substituted, provided no deduction, including the interest, shall be allowed in respect of dividend income or income from unlisted mutual fund, specified unit trust of India. See, Section 93 of the Income Tax Act 2025, corresponding to Section 57 of the Income Tax Act 1961, provides for deduction from income chargeable under the head income from other sources. Section 93, subsection 2 of the Income Tax Act 2025, corresponding to the first projo to Section 57 of the Income Tax Act 1961, allows a shareholder to claim a deduction for the interest expenditure from the dividend income, subject to limit of 20% of total dividend income. No further deduction is allowed for any other expenses, including commission, remuneration paid to a banker or any other person for the purpose of realizing such dividend. Section 93, subsection 2 is a proposed to be substituted to provide that no deduction, including interest, shall be allowed in respect of any dividend income or income from unit of the mutual fund or a specified unit trust of India units. Rationalization of certain terms for treasury centers in IFSC. Section 2, subsection 40 of the Income Tax Act 2025, corresponding to Section 2, subsection 22 of the Income Tax Act 1961, define the term dividend and exclude certain transactions from the scope of the under subclass 5. Any advance or loan between the two group entities not treated as a dividend when one of the entities is a finance company or a finance unit, and the parent or principal entity of the group is listed on a stock exchange outside India other than countries specified by the board. This exclusion aimed to facilitate genuine intra-group financing arrangement without triggering deemed dividend taxation. The rationalize and tighten this exclusion, it is a proposed to amend subclass 5 to require that the other group entity involved in the transaction to be located in a notified jurisdiction outside India. Additionally, the parent or principal entity of the group must be listed on stock exchange in a country or territory outside India, and the central government will specify that country or territory through notification in the official gazette. For clarify and consistent interpretation, the proposal also introduced specific definition of a group entity and parent entity, a principal entity, by aligning them with the International Financial Service Center Authority Payment Services Regulations 2024. By clearly defining the control through voting power or board control, the amendment narrow the scope of the exclusion of the authentic offshoring group structure. Merger registered NPO will not trigger accredited tax. Super amendment. మామూలు అమెండ్మెంట్ కాదు నాన్న ఇది. Merger of the registered NPO non-profit organization will not trigger accredited tax. A new section 35 4A 354A is proposed to be inserted in Income Tax Act 2025, which provides that tax on accredited income under section 352 shall not apply where registered NPO merge with the other registered NPO having the same similar object, subject to prescribed conditions of the amendment of the provision statutory protection similar section 12 AC of the Income Tax Act 1961. This remove the litigation risk in genuine NPO mergers. No cancellation of registration of an NPO merely on the ground carrying the commercial activity in the advancement of any other general public utility. No. No cancellation of registration of NPO merely on the ground of the carrying of the commercial activity, advancement of any other object of the general public utility, applicable Finance Act, Finance Assessment Year 2627, Section 346 of the Income Tax Act. The prescribed the to Finance Act, so Section 346 of the Income Tax Act 2025 prescribes specific restrictions on commercial activity undertaken by a registered NPO as advancement of any other object of general public utility GPU category. Commercial activities are permitted only where all the following conditions are cumulatively satisfied. The activity is undertaken in the course of actual carrying GPU, general public utility object, aggregate the receipt of the such activity do not exceed 20% of the total receipt of the NPO for the relevant tax year, and separate books of accounts are maintained in respect of such activity. The provision substantially corresponding to the provision of the Section 215 of the Income Tax Act 1961. ఇది ఒక్క సెక్షన్ చదివి ఆపేద్దామా? ట్రస్ట్లో ఇరగదీసాడు అమెండ్మెంట్స్. Section 346 of the Section 346 of the Income Tax Act 2025 prescribes specific restrictions on commercial activities undertaken by the registered NPO for the in the advancement of any other object of general public utility. Categorically, commercial activity is permitted only where the following conditions are cumulatively satisfied. The activity is undertaken in the course of the actual carrying out the general public utility object of the aggregate receipts from such activity do not exceed 20% of the total receipt of the NPO non-profit organization for the relevant tax year, and separate books of accounts are maintained in the respect of such activity. This provision substantially corresponding to the provision of Section 2, Section 15 of the Income Tax Act 1961. A breach of any condition under Section 346, such as exceeding the 20% of threshold undertaking and unrelated commercial activity, or failure to maintain the separate books. Section 35 subsection 1, Section 351 subsection 1, Class B. Section 351 subsection 1 class B of expressly includes violations of section 346 of the within the scope of the specified violation This empower the tax authorities to cancel the NPO registration and may also result in tax on accredited income under Section 352, subject to the prescribed condition. Section 353 of the violate, Section 346 and other violations triggering a special computation of the mechanism under the benefit of the charitable regime is denied for tax year and income tax in the restricted basis. The Finance Bill 2026 proposed to remove the commercial activity by NPO under the general public utility category from the scope of the specified violation under Section 351 earlier. Such a breach could have lead to the cancellation of the registration and levy of the exit tax. The amendment restored the position under the Income Tax Act 1961, where such violation result only in year-specific denial of exemption. It shall now be treated merely other violation under Section 353, trigger the special computation for the tax year without affecting the registration of the NPO. అయ్యయ్యయ్యో! చాలా అమెండ్మెంట్స్ ఉన్నాయే. Dear friends, now time up. Now time is 10 o'clock. I see you. Bye bye. We'll meet by tomorrow, 9 o'clock. We are triggering the Finance Act 2026. We'll see, we'll enjoy, we'll learn. Thank you. Bye bye. See you. Tata.